This is Made for More Living with Johnny Jennings. Online at madeformorerealty.com.
So Chad, I'd say we're good friends. Would you agree?
I mean, I would hope so at this point.
At this point, yeah. Well, so I got to tell you this story. I had the craziest massage the other day.
I don't think that's something you should be telling
you
other people.
You don't want to hear it on the radio? No, it was. I've never had a massage like this before. It was crazy, and the reason why it was crazy, like I've had some painful massages before, but this lady was like I was sweating. I thought I was going to vomit. I was going to make a fool of myself.
So, okay. So many questions right from the get-go. Is this a place that you have frequented before?
Nope, never been there before.
Okay, new person, new location, so you didn't know what you were in for.
Well, a buddy told me to be prepared. But what was crazy was he had shoulder pain, and she was working on his hips, and his shoulder pain went away. And she said because of how stuff's connected. And I was like, dude, I'm having shoulder pain. Maybe I can go in and see her. And very, very, very booked up. Like she told me it'd be like 3 months. But if she had a cancellation, then she'd let me know.
Wow.
And so she had a cancellation, and I went in. And man, it was brutally painful. But I walked out. So normally, get a little nerdy on you. So I'm training for that Ironman. I have a trainer, a bike trainer. So basically, for those people who don't know what a bike trainer is, it's basically your bike with the back tire off, plugged into this electric motor. Yeah. And it kind of provides resistance, and it simulates you riding on the road. And the app that that goes with it, it'll tell me what I think it's wattage is, functional power threshold. I don't know, whatever it is. But normally I'm between 150 and 175 over like the course of like an hour, 90 minutes. And after having this crazy massage, it bumped up from like 200 to 225
There you go.
Like just because of the blood flow. And
wow, that's incredible.
I know. It was like she's incredible. She's amazing.
So you'll be back.
100%. I'm like, when can I come back? And she's like, well, keep the appointment that's a couple months out, And if
but it was
changes.
painful while she was doing it.
So painful.
And you didn't speak up or say anything.
I tried not to. I think I did squirm involuntarily once, but I was proud that it only happened once.
So was it like pressure on the muscles, or was it more like alignment, like a chiropractor would do?
Not alignment, not like a chiropractor. It was like if you Google or YouTube painful massage videos, it's exactly that. She wasn't using like a metal, like they call it I think a blade, like blading. She wasn't doing that. It was her elbows and her fingers and stuff. But the most painful part, I did not. So I thought my calves were gonna hurt. I thought my shoulder was gonna hurt. I thought my neck would hurt. But I did not expect my left quad. That is where she got me. That's why I squirmed involuntarily, like going from like the knee up to the hip. Like I don't know what she was pushing on, but it hurt like a big dog. And I was full on sweating. But what does this have to do with real estate? Nothing.
I know where you're going with this. But know.
You know I'm going with this?
Yeah, absolutely.
So it's kind of painful, kind of like the tariff situation right now. Right? So basically, Gloria is like Trump. Gloria's the massage therapist, and Trump's the president. And I don't know. I know you're sick and tired of talking about this. So you're saying
similar to your massage, it's painful for a little while in the short term, but in the long run, it's going to make everything function and flow a whole lot better, and you're going to feel better.
I think so. But that's my little John A. Realtor's opinion. What are you seeing, Chad?
I would say that I mostly agree with that. It is long term, hopefully going to have a very positive outcome, but today it just has a very rip the Band-Aid off feel because it was so jarring. It was too much, too fast. And a lot of people just weren't prepared for that, whether they were fearful, whether they were scared, whether they were uncomfortable, whatever the feelings behind it. It has caused a lot of mixed emotions on it. And so I have a lot of people that wanted to contact me that were panicked.
Yeah.
And I had some people that were panicked in the opposite direction.
What do you mean?
They were almost kind of excited. They were looking at that as opportunistic, and we saw an immediate reaction in the stock market through the whole tariff actions. The market took a temporary dip. Some people were panicked by this. I had more people that were calling me frantically wanting to put money into the market to buy the dip.
Sure.
Oh, that's interesting. I have not heard a whole lot of people doing that.
And so there was a mixed bag of emotions there, some on the fear side, some on the excitement side.
So when somebody's scared like that, what do you tell them? What do you recommend to them?
It is unfortunately the hardest to hear advice because everyone wants a fix. Mm-hmm. I'm feeling this, therefore, fix my feeling or make me feel normal again. You go to the doctor because something's ailing you. Please fix this, prescribe something, surgically remove something, whatever you need to do, make me feel normal again. Mm-hmm. The best advice when things like that are happening, more often than not, is to take a step back, rethink what your long-term goals are, and how is this affecting you today? You're not retiring 2 weeks from today, likely. Therefore, don't be concerned about what's happening tomorrow.
Yeah.
Be thinking about, well, how does this affect me a year from now, 5 years from now, 15 years from now? Because these things, these pullbacks in the market, they're not uncommon. What we saw through April, we see that almost every 1.5 to 2 years.
So for earlier in another segment, you were talking about how you can claim those losses and like shelve them and use them at a different time. Mm-hmm. With what happened with the tariffs, is that something that your clients can use? Like, are the losses based off of like a January to December, or is it based off of a different period of time? Like, how could people use that to their advantage?
Sure. A lot of those losses, when they want to capitalize on them, are based off of when they were purchased.
Okay.
So let's say all I ever did was I bought one share of company X, and I bought it back in 2015. Well, relative to today, it's significantly up.
Got it.
Even through the last several weeks when things took a dive and then ultimately recouped completely, through that dive, the bottom of that trough in April 8th, well, that's still significantly higher than it was a decade ago. And so there's not really anything to capitalize on in losses there.
Okay, so it's just if they've lost on it while owning it, you can claim the loss.
Since that purchase time, yeah.
Okay, got it. Okay, so probably not a whole lot of people that are going to be able to do that.
There were some rotations that were able to take place, but it depends again on everyone's investment path. If they were dumping in a lump sum a decade ago, or if they're making ongoing regular deposits into these account types. Mm-hmm. And I'll clarify, it's not for every account type. It's not a 401k. They're not even offered there. It's not an IRA because those are tax sheltered. These are open taxable accounts, like a joint account or a trust account.
Okay, good to know. Before we get into trusts, I do want to say, like, the conversation that you're having with your clients right now about the dip is very similar to the conversations I'm having often with sellers right now. Mm-hmm. Like, it is absolutely heart-wrenching. I was in the last 5 days, I've had 3 of these conversations. One, a lady bought the house. She wanted to have a good place for her family. Something's clearly happening in her life. I don't know the details. But since buying the house, they also got a second loan out and made some repairs and did some stuff to the home. Mm. And now she's essentially upside down on the home. Another lady bought a house, and it was a new build, and there's just so many issues with the new build. She wants out of it, like crazy things. Like, she bought it 3 months ago, and the pipe has burst, the AC has gone out, the hot water heater has stopped working. Wow. Like crazy things for a brand new home. And she wants out, but it's like, hey, you just bought the house a few months ago. You're not going to be able to recoup the costs of selling and then buy another home. And then I forget what the third person was, but the third person was they're going through a divorce. They bought the house. I thought they'd be there for a while. Life took a different path, and now they're potentially going to have to come out of pocket to sell. So these are things outside my control. I wasn't there when you bought the house. Mm-hmm. I'm there right now, and I don't have control over what the market is saying that your house is worth. Like, I have zero control over that. But you're right; they are very hard conversations to have. And the approach that we take with Made for More and our clients is we want to be honest with our clients. Say, hey, this is the landscape. I'm not going to sugarcoat this for you. I'm here to help you. I can walk you through it. I can give you best possible options. But this is the situation, whereas many realtors will tell them what they want to hear. In fact, one of those people, the realtor told them what they wanted to hear, and they listed the home way, way, way too high, and they had it listed for over a year, and it never sold.
Wow.
And so now they've been paying on this home. They've been paying the maintenance. They've been dealing with, the situation for a year longer than they would have needed to if the realtor would have been honest with them up front. Because at the end of the day, I say be honest. I don't think it was it's real estate. It's not rocket science. The value of a home, like when the homeowners are telling you, hey, I think you're overpricing my home, that's a good indicator that, hey, the home is overpriced. Mm-hmm. But yeah, very, very, very similar situations, both it seems in the financial markets and the real estate market right now, because the market, I would say in the Sacramento region, is starting to decline. I would say that. I'm not saying it's the same for everybody, but sellers are going to have to be, if the trend continues, sellers are going to have to become accustomed to hearing that their house is now worth less than what their neighbor's house sold for a year or two ago, which is not, again, what people want to hear, but it's the truth. So as we're wrapping this up, in 30 seconds or less-ish, why should somebody have a trust? Like, do you have a story of somebody who had a trust or that didn't have a trust and should have had a trust?
I feel that a trust is a very good way to go about estate planning and protecting your family, but also helping and facilitating if you were to pass away.
Unexpectedly?
Yeah. Well, and even later in life, we're all going to pass away at some point. Having things lined up so that your family does not have to jump through so many hoops, and so much of your estate does not have to go out in fees and taxes and costs, so that your beneficiaries can keep more of that money. One example is a sad one. This gentleman did not have a living trust, but a step further than that, he never completed his beneficiary assignment. And so he did not place a beneficiary on a retirement account, and therefore it could not transition to that person when he did unexpectedly pass. And he was not older, he was in his 50s. Wow. And so that was very untimely. He didn't complete the assignment and thought, it's no big deal, I'll get to it later. And later never came. Oh,
man, that's heartbreaking, because that happens so many times. And I just recently learned that you don't even have to go through probate. The approach won't even take it on if it's like under, $190,000 or less?
Sure. So under certain circumstances and sizes of estate, there's a small estate affidavit that you can go through. But surprisingly, it's hard to qualify for that. And so if you have a home, it's not the equity of the home, it's the value of the home itself. So if you live in Sacramento area and you have a $400,000, $500,000, $600,000+ home, you're automatically disqualified from that.
Yeah. So just get the trust, get them in place. What's the typical trust cost?
Typical trusts out there that I've been hearing lately, because I always like to gauge folks if they've gone elsewhere to get a trust.
Yeah.
And it's tacky to ask, but I got to know, like, hey, how much did this cost? Mm-hmm. What did this run you? To make sure that we're staying as fair and competitive as possible. But it seems like the average is running anywhere between $3,500 to $5,000 for an estate plan.
Yikes.
Yeah.
That seems high.
I felt so too, but we tend to run quite a bit less. So when we do estate planning and we're assembling a living trust with everything that comes with it, all the powers of attorney, moving your primary residence into the name of the trust for you, setting up things for your beneficiaries, putting together a map so your beneficiaries understand all of the assets, where they're at, so that it's very functional and easy, is $2,200.
$2,200. Yep. I recently read the average cost of probate is $30,000. That's just the average cost. Could be more, could be less, but $2,200 for peace of mind. Reach out to Chad, thrivestewardship.com to get that right. And then, of course, you can always reach out to us anytime. Just Google Made for More Realty, and we'd be happy to connect you with Chad. Chad, thank you so much for being on the show today.
Thank you for having me. It's always a pleasure.
Amazon bestseller. Next time you're going to be on, maybe New York Times bestseller.
Oh, wouldn't that be wonderful?
Let's go.